Welcome back to the Digital Asset Report. Bitcoin is starting the week near $71,900 with Ethereum around $2,200, and the market is trying to hold steady after another macro shock. Oil has jumped back above $100 after US-Iran peace talks collapsed, and that has pushed inflation back into the center of the conversation. So yes, crypto is range-bound for now, with the most looking to the $80,000 level as a sign of change in the market regime. President Trump reiterated that the Strait of Hormuz is not necessary, stating that the US has more oil than its rivals. Take a listen.
We have more oil because of drill baby drill. We have more oil than Russia and Saudi Arabia put together. So if you look at Russia and Saudi Arabia, two big ones, we have much more oil than they have put together. And what's happening is boats are coming over here, filling up. We don't have to go through the Hormuz.
Also in Washington, Treasury Secretary Scott Bessent urged Congress to pass the Clarity Act, arguing that regulatory uncertainty is still pushing crypto development and investment overseas. The Treasury Department also launched a cybersecurity information sharing program for eligible digital asset firms, giving them access to the same threat intelligence already shared with traditional financial institutions. And stablecoins also had a meaningful week this week. The Treasury Department proposed a rule to implement the Genius Act's anti-money laundering and sanctions requirements for permitted payment stablecoin issuers. That would subject those issuers to financial institution-style compliance obligations, including sanctions controls and illicit finance monitoring. And this is not just a US story. In Hong Kong, regulators issued the city's first fiat-backed stablecoin licenses to HSBC and a Standard Chartered-led joint venture. Both are expected to launch in the second half of this year for cross-border payments, local payments, and digital asset trading. That's another big signal that major banks are starting to get actively involved with stablecoins. At the same time, corporate treasuries and spot ETFs are still reshaping supply. Strategy disclosed a new $1 billion Bitcoin purchase on Monday, adding almost 14,000 BTC and bringing its total holdings to 780,897 Bitcoin. Notably, the proceeds were entirely sourced from the STRC preferred stock ATM offering. This is the second week in the last month where Strategy sold $1 billion of preferred stock in a single week and used it to buy Bitcoin. In comparison, Bitcoin ETFs have registered only $668 million of inflows since April 1st. BlackRock's IBIT reported $57.7 billion in net assets as of April 10th, with share and basket data implying that it holds roughly 789,000 Bitcoin. So that means the two biggest accumulation vehicles in the market, Strategy and the largest Bitcoin ETF, are now running almost side by side in terms of Bitcoin holdings. And speaking of ETFs, Morgan Stanley just entered the race with the launch of the Morgan Stanley Bitcoin Trust, trading under ticker MSBT. It has a 0.14% sponsor fee, which the firm says is currently the lowest Bitcoin ETP fee on the market.
But I have to tell you, in terms of the pickup we saw yesterday, the first day of trading, our best first day of trading for any of our ETFs since we've started the ETF product line a couple years ago. So I think that speaks to the demand that's still out there for the Bitcoin ETF. Almost 1.7 million shares traded yesterday, and at 12 o'clock today, we are already having another good day today. As you said, it's a nice week in the market, a nice day in the market for some pickup in Bitcoin and the markets to help us out there.
Elsewhere, the institutional rails kept expanding. HSBC said today that it completed a pilot for tokenized deposits on the Canton network, including issuance, transfer, and atomic settlement against other digital assets. That is exactly the kind of infrastructure work large institutions care about because it points towards faster settlement and interoperable digital money inside regulated environments. And before we wrap up today, the risk story is still moving with the adoption story. Chainalysis said its latest analysis of the April 1st drift exploit, a $285 million loss, shows preliminary indicators consistent with previously attributed North Korean tactics, though formal attribution is still pending. The broader picture this week is capital is coming in, payment rails are opening up, stablecoin rules are getting written, and the security burden is rising right alongside adoption. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.